Welcome. You're listening to Mortgage Investing 101, the show where we discuss high yield real estate mortgage backed investment opportunities. I'm Edward Brown, your host, and I'm proud to introduce my co host, Mark Hanf, president of Pacific Private Money, one of the fastest growing private mortgage investment firms in Northern California. Our goal on this show is to provide information to increase your awareness of these important alternative investment strategies where you can earn secured high yields using your savings or IRA accounts. Annual yields of, get this, 8% and more are not uncommon using these strategies we're going to discuss on today's show. And if you like what you hear today, please call Pacific Private Money at 415-883-2150 for more information, or go to pacificprivatemoney.com. You can also call our hotline at 888-529-1134 and leave your name and your question. We'll get back to you after the show. For fun, we're also going to have trivia contests with, during the commercial breaks, where the first three callers with the correct answer win a free 3-day, 2-night vacation. And the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. Lighthouse is only requesting a $75 house cleaning fee. Check them out at lighthouseforfun.com. And today's trivia theme is presidential quotes. So we'll have some fun with that. Okay, now the name of the show is Mortgage Investing 101. Mark, we've been on the show, on the air now for a couple of months, and we're getting a lot of good feedback from people, but I know we have a lot of new listeners. So explain what mortgage investing is, please.
Good morning, Edward. Happy to be here. And so, yes, Mortgage Investing 101. Mortgage investing is one of the least understood and least known, in my opinion, investment strategies, but it's a really important investment strategy that listeners out there really need to be aware of. And so what is mortgage investing? Well, it actually goes by a number of different names. You may have heard it called trust deed investing.
Okay.
You may have heard it called private lending. You may know someone, or maybe you yourself have invested previously in a mortgage pool fund. But regardless of which specific strategy that you used for earning high yields on mortgage investing, they all tend to have the same similar characteristics, and those are the investment is secured by real estate loans. And so let's use the term private lending as an example. What happened in 2008 with the subprime meltdown? We're now basically hitting the 5-year anniversary of that event. And over
Seems like yesterday.
And over the last 5 years, a number of companies, such as ours, Pacific Private Money, were created to take advantage of a void that the banks left in the lending market when they decided they were no longer going to serve real estate investors as a borrowing class.
It's amazing how many stories you hear just even at a cocktail party about how hard it is to get a bank loan.
If you're a real estate investor.
If you're a real estate investor, yeah.
Well, it's also hard if you're a consumer. If you're a consumer home loans right now, right? If you were accustomed to the no doc, no basically FICO score driven loans of the past, those have pretty much gone the wayside.
Oh yeah,
as well.
Some of these banks are asking, any deposit over $300 needs a dissertation as to why it's in there.
But we serve just a certain niche of the market. At Pacific Private Money, we are not making loans to consumers, generally speaking. We're not generally making consumer home loans, although there is an exception to that. We might talk about that a little bit later on the show. But our primary target market are real estate investors who have a viable business strategy. Maybe they're buying, fixing, and flipping real estate. Maybe they're buying rental property for long-term hold. Any number of things. Maybe they own commercial property and it's a relatively small loan, which banks are not real big. The commercial banks generally don't lend on commercial properties under several $1 million. We just need a couple $100,000 or $500,000.
And fix and flip, is that still viable now? I mean,
absolutely still viable
okay.
now. The good flippers, the guys that are really experienced out there, they are always finding opportunities. The reason why you're hearing it's a tight market is because the general public who think that, wouldn't it be great to buy fix and flip property and make a $50,000 or $100,000 profit? Those guys are not finding anything out there. There's not a whole lot that's available at the retail level on the multiple listing service, or MLS as we call it. They're hard to find good deals today versus say 6 months or a year ago. But those people who know how to find opportunities, they're still finding opportunities out there. But the point I really wanted to make, getting back to what is private lending, in the last 5 years, there's been basically a new industry, a new collection of companies that have been founded and are, quite frankly, like our company, Pacific Private Money, we've really flourished in this environment. And we're here to serve the real estate investment community that, like I said, has been shut out by the banks. And we provide them leverage. We provide them purchase loans to buy fixed income property, or purchase loans to acquire rental property for long-term hold, or cash out on an existing property they own. A lot of people have, not everyone lost their real estate when the market turned. Some people were savvy and they held onto their real estate. They weren't over leveraged and they weren't upside down. And some of them own property free and clear. Yet if you take free and clear properties and go to the bank today and ask for a loan, again, oftentimes they'll say no, because that's just not the market they're currently serving, and we don't know when they're going to come back to that. So we've been writing loans to real estate investors. Now over 600 loans we've written to real estate investors over the last 5 years, and all of those loans have been funded with private capital, private individual capital, through either their savings accounts, or maybe they have a family trust set up. I mean, really, the money comes from any number of sources, but it's just essentially cash that these regular individuals have. Most of them are Bay Area residents that we work with. In fact, we're located in Marin County, and many of my investors live in Marin County. And these are people who decided either they've gotten out of the stock market, or they don't have all of their eggs in one basket. They don't have all their money invested in stocks or bonds or other traditional type of investments. They're sitting on cash, looking for alternative strategies to earn a higher yield on their savings. Because let's face it, money market accounts are paying nothing. Stock market goes up, it goes down. It's been very unreliable, but basically bank savings rates right now are about close to zero as you can get. So people are looking for alternative strategies for how to earn high yields. And again, that's what this show is all about, to talk about what is mortgage investing, what is private lending, what are the mortgage pool fund opportunities that are available today. Because quite frankly, if you go to your financial planner or your stockbroker, they're not going to tell you about this stuff. This is not available through those venues. This is only available through certain companies like Pacific Private Money, generally licensed real estate brokers who originate privately funded loans. And the only way you can participate in them is to contact companies like ours and put yourself on the distribution list of contacts. We'll talk a little bit more about that.
Okay, so over the last 5 years, you funded 600 loans to real estate investors who, for whatever reason, could not get a regular bank loan. All right?
Correct.
Okay. What interest rate were you charging these borrowers?
So private money loans, which previously were, and still are, called hard money loans, have always been expensive. It's never been an inexpensive product. Even in 2005 and 6, when it was easy to get a bank loan, if you went to a hard money broker because for whatever reason you couldn't get that free money from the bank, they were just like giving away to anybody who could fog a mirror, you were still paying 12%, 11%. Today's hard money / private money, because we use the term interchangeably, but I may use the term private money more often than hard money, because I think the industry today doesn't resemble the industry from 10 years ago. But all of that notwithstanding, a private money loan today is still expensive money. It's not intended to be long-term financing, which is the reason why we're really not serving the consumer market, because to pay 10% for a loan, which is not uncommon in our company. Our company writes loans between 9 and 11%, with the average rate falling around 10.5% for a loan that generally gets paid off within 6 to 8 months.
Yeah, ordinarily the consumer buying a home is going to want a 30-year mortgage or a 15-year mortgage.
Right. And I did mention, earlier when I started talking about, what is private lending, that, our target market is really the real estate investment community. There are certain situations, and in fact, when we get to the deal of the week in the next segment, I'll talk a little bit more about a specific deal, but there are certain consumer home loan purchase situations where last minute they realize their bank's not going to come through, and they don't want to lose the opportunity to buy this house that they're in contract with. Maybe it's their dream house, maybe it's just a really good deal they got, and we do have a program that allows us to make a short-term loan to help them buy that property. Again, it's not inexpensive. I mean, you have to take a broad look and say, look, this is just going to be the cost of me getting this house.
Well, if it's short term, then the interest rate isn't as big a key.
Right.
And again, remember, we got to tell the audience, and you're listening to Mortgage Investing 101 with Edward Brown and Mark Hanf. Mark can be reached at Pacific Private Money at 415-883-2150. I'm the audience listening in right now, and I'm thinking 8, 9, 10, 11%. This has got to be risky. And so I know that there's a reason why it's not risky, and we're going to get to that in the next segment. We're going to cut to our first commercial break, and then when we come back, we'll talk about the risks and also the deal of the week. I want to have you give it a specific example, okay? All right. We have to go to our first commercial break, so here's the first trivia question. Again, the theme is presidential quotes. Which president said, "Ask not what your country can do for you, but what you can do for your country"? That's not a very good accent, but that's
trying to give it away by
try by doing the Bostonian accent.
There you go.
Okay, the first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-529-1134. That's 888-529-1134 to answer this question. Which president said, "Ask not what your country can do for you, but what you can do for your country"? Again, 888-529-1134. Make sure to include your name and your email address, and please speak slowly and spell out your email one letter at a time. Don't touch that dial, because Mortgage Investing 101 will be right back to explain about the risks and the rewards of investing in trust deeds. Now, when I send you this file for the YouTube, do you have like Quick Player or Real Player? Because then you can edit it with taking out all the.
Well, Marcus can do all of that.
Okay.
So I'll give him the file and see, hey, is the audio better on this one than the ones that we had done previously? But I think what I'd really, my goal, if I had to try to be as strategic as possible, my primary goal for Mortgage Investing 101 website would be to have the audio, the downloadable podcast, because I think more people would click on those, download them to their iPhone or whatever, and listen to the show. I think. I mean, but having the video is great too, and it's an opportunity for them to see us in action.
Well, also
I like the idea of 10-minute clips, though. That's the thing I was trying to get him to do, but he's been working on a number of other projects for us, and I just can't seem to get it. He only comes in for 2 hours a day, like 3 or 4 days a week now. Just got school. Yeah. So it's. I don't mind paying James to do it if that makes more sense, because maybe he has the bandwidth to do it.
Yeah, I don't know how expensive he'd be for that. Christina to do it.
Yeah.
Kids know everything nowadays.
Yeah, it won't be too long before she absolutely could.
How old is she? 12.
12, yeah, she just turned 12.
She's in 6th grade.
Yes.
Welcome back to Mortgage Investing 101. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, California's fastest growing private mortgage investment firm. When we cut to the first commercial break, we asked this trivia question. Again, the theme is presidential quotes. Which president said, "Ask not what your country can do for you, but what you can do for your country"?
Well, that's an easy one. I hope that your next questions will be a little bit harder. That's John F. Kennedy, of course.
That is correct.
I can't do the accent.
I know. I'm trying to do the Bostonian accent. That's a tough one. Okay. Now, so Mark, we're talking about private investing,
mortgage investing, private lending, trust deed investing.
It's all the same
under a number of. Well, it comes under a number of names. And when we cut to the last commercial break, he said we'd come back and talk about the risks because if we're sitting here saying, look, you can make 8% or more on your money.
That's what our original tagline is. So.
It is,
okay.
And I want to tell you that, in my opinion, of course, I would have this opinion because I'm in the business of generating privately funded loans, but I believe that these loans that we make have safety and security features that are not found in most other investments. Certainly not in stocks, because as we know, stocks are called equities because you're buying into the perceived value of the company.
Sure,
and
that
can go up and it can go down.
The principal fluctuates with the stock market.
You can and will lose money investing in stocks. We all know that, right? And if you want the super safety and security that are found in
treasury bills,
or even bonds, you have to take some
bonds fluctuate too. Though.
Well, they do, but you have to accept some fairly conservative, i.e. low yields. You're just not going to find you're certainly not going to find 8% on quality bonds.
Not on quality conservative stuff. That is correct.
But yet you can get, in fact, an 8% yield is a fairly conservative yield in private lending. We have clients that are making 9 and 10% on their money, based on the types of loans that they're willing to fund. And there are certain people that I've worked with over the last 5 years that they themselves have been participating in private lending for 10, 15, 20 years. Yep. So they're really educated, and they know the ins and outs of making an investment decision on a note, and those people will oftentimes earn higher yields. But for the more passive investor, and so this show is really geared for the person who has not heard of mortgage investing before, maybe has heard about it but really doesn't know where to go and who to turn to, and is looking for a more passive way where they don't really need to have to understand the ins and outs, because really we do the underwriting when the borrower applies for a loan.
But just like the bank does the underwriting.
And I do have I have a significant percentage of clients who rely on our reputation for underwriting. They're not driving the property, they're not meeting the borrower, they're not studying the loan application. So that this show is really for them to kind of talk about, well, what are the risks when you participate in private lending or trustee.
Well, what is your track record from the standpoint? You had said in the last segment you did 600 loans.
600 loans.
Okay, and with hearing these high interest rates, one would presume that there's a fairly high default rate.
And that used to be true years ago. So 10, 15, 20 years ago, the industry of hard money lending had a significant default rate. In fact, I wouldn't be surprised, and the numbers aren't public because these are all private companies, but it wouldn't surprise me if it was close to 10%, to be honest with you. And not necessarily the 10% were foreclosed upon, but defaulted, stopped making the payments, you had to chase him, you had to foreclose, you had to threaten this and that and get him to sell the property, whatever.
Okay. So of the 600,
we've done, less than 2% have gone into default.
That's
of
amazingly low.
And that's gone into default. That doesn't mean, of that, even less than that, we've actually had to foreclose on. I think the current count is 5 loans out of 600 that we've made where we, on behalf of the lender, helped them foreclose on the property.
Okay, and out of those 5, how many lost money?
0. So
0.
All of them made money on the deal. None of them lost principal.
Okay, how did they make money?
But you make money because if we do our job correctly and we work very diligently to make sure that we do, we don't do high percentage loans. In fact, the highest percentage loan we generally do, and there are always exceptions.
About the loan to
the
value.
Loan to value or loan to purchase price is limited to approximately 70%, and oftentimes it's quite a bit less than that. So,
okay, so on a $100,000 loan, you'll do $70,000.
Right.
Okay.
So the loans that we've had to foreclose upon because something happened with the borrower, he wasn't able to execute the strategy as planned, or he got sick. In fact, in one case, the person actually died.
The borrower died.
The borrower died, and the wife was not in a position to make up. So actually, we did not foreclose on that. That was one where they were able to sell the property and pay off the loan. So that's actually a bad example. But but of the properties that were actually physically foreclosed upon, all of them were worth more than the underlying loan, and the lenders who ended up owning that property were actually better off. And in fact, I have a number of clients whose portfolio of real estate that they own, they've gotten as a result of years and years and years of making private money loans and then foreclosing on properties. Now, I don't think that that's a great way to build. It's certainly it's not a
one way to build your
it's
portfolio.
one way to build your real estate portfolio. It's not a feel good way, and it's not one you would brag about. Well, maybe you brag about it at cocktail parties to your friends.
If you're not throwing, you're not making
I'm not
consumer
throwing it
loans,
out, right.
and you're not throwing people out of their
Right.
houses.
So at Pacific, we're not a loan-to-own type of company, meaning we're not looking for opportunities to make an expensive loan to somebody so that we can foreclose. That is not what we do.
That sounds like predatory lending.
Well, and there
We've
are
heard it.
predatory lenders out there, and there are people who are loan-to-own type of people. But generally speaking, my clients, they just want to make a high yield safely and securely on their money. They want to make high yields and low risk. Is that possible? Yes, indeed it is. Absolutely.
Okay, so now don't keep me in suspenders any longer. Because we said on this segment we were also going to say the deal of the week, because I think people want to hear a specific example. We were saying, oh, you can earn high yields with relatively low risk. Give us a real example.
Well, we're working on this deal actually all last week, and we don't actually know that we're going to close this deal next week. But if we do, it's because the borrower needs us to. And let me explain. So this is an example of not a real estate investor, although the borrower is a real estate professional. They're a licensed realtor. And they've lived in a home in Marin County for a number of years, and they have an option to purchase that home, which they are now exercising. And they're exercising it after the person who gave them the option died. And so the house is in probate, and the executor of the estate has basically said, look, you either exercise that option or get out, because we're going to sell the property. Well, the time is marching on, and they believed that they had a conventional bank loan lined up.
Well, give us just having an option, I assume it's at a good price. Or else
It's
they
a
wouldn't be.
very, very good price. So the numbers here, I'm going to use approximate numbers, but they have an option to exercise a purchase on a home at $600,000. The approximate value of the house, the appraisal did come in, and it came in the mid 700,000s.
Okay, so they're getting about $100,000 discount.
Correct.
Okay.
Right.
All right.
And so they've asked us if we could be in a backup position in case the bank doesn't pull through. It looks as though
How
at this
large a
point,
loan was the bank going to give them?
well, the bank's going to give them what amounts to a 75%
Of the purchase price?
No, actually, that's incorrect. I'm sorry. 80% of the purchase price is the bank loan they're trying to get, and because the appraisal came in higher, and we're really looking at the appraisal. Again, this is Marin County. We're pretty comfortable with how the values work. This is a situation where we would be making a loan to them at approximately at approximately 70% loan to value. So again, we haven't closed this loan yet, but we like the property, we like the borrower, we know that they can repay the loan quickly with a bank loan. They just don't quite have the time right now to get it done. And guess what? The government shutdown is actually one of the reasons why they're unable to close with the bank, because they're not able to get their form, is it the 506? 4506.
4506.
Yeah, 4506.
Like verification, the
Verification,
IRS of the tax
right.
return.
Exactly.
Interesting.
So anyway, that's a loan that we're going to
Wait,
do.
so actually you may be doing well because of this government shutdown. You didn't cause it, did you?
Well, we've gotten several applications for bridge loans on a consumer home loan purchase as backups in case the shutdown continues to drag on. And so anyway, in this, here's a situation where a consumer has an opportunity to buy a home. They thought they could rely on bank financing. The bank in this case could not come through. They don't want to pay the points and fees for a privately funded loan. It's expensive.
So they would qualify for a regular bank loan because of their
They just
income,
can't get it
FICO
done in
and all that.
time. And the seller, the estate, is basically saying, look, you you've got to close by X or we're done.
That's when their option expires.
That's when the
Yeah,
option
because
expires.
especially if they don't want to let it drag on themselves, because it sounds like they can get 100,000 higher.
So actually, the date to close is next Thursday. So
Wow.
they've asked for an extension. They may get the extension. Again, we're going into a lot of extraneous detail, but if they do not get the extension, they know that the bank will not be able to close by Thursday. We can't. We can close in 3-4 business
Okay,
days.
so-
We do so on a regular
Okay,
basis.
so I'm thinking of this exact example. What's to stop this borrower from getting a loan from you, and then the government doesn't shut down anymore, and a week later gets the bank loan and pays you off, and you've done all that work?
Well, we don't have a problem with that because we have as one of our resources to fund loans our mortgage pool fund. And when we fund a loan through our mortgage pool fund, the fund gets a share of the origination points as well as the interest rate. So if the borrower has to pay off the loan early, we're okay with that. But number two is that generally speaking, and this doesn't happen in every case, but more often than not, we're requiring a minimum interest guarantee on our loans. And in this case, it's a 90-day minimum interest guarantee.
Oh, so even if she pays it off in 2 weeks, she still has to pay you 90 days worth of
She still
interest?
promised the quote lender a minimum 90
Wow.
days interest. Now, so in this particular loan, we're probably not going to fund it with a private individual, but we will be using private capital because our mortgage pool fund is comprised of about 20 individuals to date who have invested their capital into the Pacific
So,
Private
so
Money Fund.
those people who have invested in the mortgage pool fund, if this loan goes through, the mortgage pool fund would earn a portion of the points,
Right. So
and would earn what interest rate?
10% on
10% on their money for probably at the most 3 months, because she'll probably refinance with a regular bank.
Right, exactly.
But that sounds like a pretty low risk.
I think it is, and so again, we started this segment talking about the risk. What's the risk really of these loans? Well, take a step back and think about it. Banks have thrived for how long? Making real estate secured
And
loans.
let me interrupt you for a second, because it's been a while since we told the audience that
Of
the name of the
course.
show is called Mortgage Investing. You're listening to Mortgage Investing 101 with
Yes,
Edward
you
Brown
are.
and Mark Hunt. And if you like what you hear, you can call Pacific Private Money at 415-883-2150 for more information about what we're talking about. Go ahead,
Right,
Mark.
or go to our website too.
Yeah.
We have a new website that we're putting up for the radio show called Mortgage Investing 101, and that would be mortgageinvesting101.com. And we don't have them up yet, but we're working on getting podcasts of our
Okay.
prior shows for those who want to listen or who missed the live broadcast at 10 a.m. on Saturdays. Also, you can go to pacificprivatemoney.com. That's the primary website for our company, and that will also take you to other websites that provide additional information about trust deed investing, mortgage pool funds, etc.
Okay. And you were talking about the banks.
So the banks.
Oh, you know what? Tell you what. Let's cut to our.
Come back.
Well, yeah, we're going to come back. We're going to cut to our second commercial break here again. The theme is presidential quotes, and here is the question. This one's a little bit harder. Which president said, "Walk softly and carry a big stick"? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-529-1134 to answer this question. Which president said, "Walk softly and carry a big stick"? Again, 888-529-1134. Make sure to include your name, your email address, speak slowly, and spell out your email one letter at a time. And don't touch that dial, because when the Mortgage Investing 101 comes back, Mark will explain more about investing in mortgages.
Okay. Good. So far, so good.
Yeah.
Time does fly, even on these, but I keep thinking,
Yeah.
God, how are we going to fill an hour? And it's like,
Oh, is it?
how are we going to, more often than not, we're cutting. Hold that thought. We'll be right back.
What did you want to cover in this last segment here?
Well, sometimes we just kind of get going, and so in this one, let's just go back and finish up a little bit on the risks, because I think that's important. Talk about how the banks and how you're the bank, and so I can just kind of go off on it. You're always good at interjecting. So, and then maybe you can ask me about the why. Tell the audience a little bit more about your mortgage pool fund.
Yeah.
And then we need to talk. We need to announce the fund launch party as well.
Oh, that's right. Let's
do that right
do
when we
right away.
Yeah.
Yeah, and then we'll do it again. At the
Right.
end.
Yeah.
I'm trying to figure out which one we got here. Yeah, we got some time.
How long?
18 and a half minutes.
Oh my gosh.
Yeah, that's good. Okay.
It's to the top of the hour.
Yeah.
Okay.
Welcome back to Mortgage Investing 101. I'm Edward Brown, your host, along with Mark Hahn of Pacific Private Money. He's the president, and it's mortgage.
Maybe nowadays might not be a good time to brag about that.
About being
Mortgage,
president.
Government shutdown and all that.
And he's president of Pacific Private Money, California's fastest growing mortgage investment firm. When we cut to the second commercial break, we asked this trivia question. Again, the theme is presidential quotes. Which president said, "Walk softly and carry a big stick"?
That was Teddy, wasn't it?
That was Teddy Roosevelt. Very good. Now, Mark, for people who want to come for a fun party, I understand that you're having a launch party.
Absolutely. We were just talking off the air how we forgot to announce that at the beginning of the show. So if you've been listening, thank you for continuing on it. And if you just tuned in, this is Mortgage Investing 101. And we are going to host an event on Wednesday, November 6th. That's Wednesday, November 6th at 6 p.m. to 8 p.m. in Marin County. It's going to be held at the Piatti restaurant in Mill Valley.
They have awesome food. How much does this cost me?
It's free.
Free?
Yeah.
That's my favorite price.
Yeah, we're not serving dinner. We are serving hors d'oeuvres. So there's going to be, there's going to be past hors d'oeuvres, et cetera, and drinks. But it's really going to be a great opportunity to learn more about mortgage investing and more specifically about our mortgage pool fund product called the Pacific Private Money Fund. That mortgage pool fund product makes loans to real estate investors in Northern California, and we just sent out our third quarter distribution checks, and the simple interest return was 8.56%.
Excellent.
Which, and for those of our investors, and there are a whole bunch of them who are letting those compound, the effective compounded return on that is projected to be 9%.
I was going to say it's probably closer to 9.
Yeah. So that's we're hosting a fund launch educational event at the Piatti restaurant at 6 p.m. on Wednesday night, November 6th. Again, the Piatti restaurant in Mill Valley. And if you want more information, please do RSVP by calling and leaving a message or speaking to one of our agents at Pacific Private Money. The number is 415-883-2150. Again, 415-883-2150, or go to our website and click on one of the email links, pacificprivatemoney.com.
And you'll get to meet both hosts?
Yeah, absolutely.
Mark and
Edward and you and I will both be there, plus our entire team. We've got a staff of 8 at Pacific Private Money, and all their young, smiling faces will be there. Well, not all of them are young.
Ooh, don't let them hear that you say that.
So at the end of the last segment, Edward, we were starting to get. We were still talking a little bit about the risk, and I started to talk about what is private lending in terms of how the banks basically. When you participate in mortgage investing or private lending, you are the bank, and so you're being the bank, and you have all of the same safety and security features that B of A, Wells Fargo, Citi, or Chase does when they make a bank. And the banks, of course, have been phenomenally successful over the years in making bank loans. I mean, that's how they make their money, and they do so with very specific. Regulated process of contracts. So whenever and most of our listening audience out there has probably borrowed from a bank, maybe you purchased a home before, and you remember the stack of papers you signed. It includes a promissory note, it includes a deed of trust that gets recorded, it includes all these other documents. Well, at Pacific Private Money, we use all those same documents. We have the
Okay.
same type of software that the big banks use. We do the same type of disclosures, and we are regulated,
Okay,
just
so
like the banks are.
so again, the reason people are coming to you instead of going to the bank, because you're almost sounding just like a bank.
We are
is-
very much like a bank. We are not a bank, but our loans that we make are structured and protected, and the contracts that we use and the disclosures that we use are virtually the same
Okay,
as
so
banks.
okay, so it sounds like you just don't have all the bureaucracy that the bank has.
That is very true.
Okay, but what about I'm listening here and I'm thinking, gosh, is this guy regulated?
Absolutely regulated.
Oh, you do? There are
We're
regulations.
regulated
okay.
by what was formerly called the Department of Real Estate. Now it's called the Bureau of Real Estate, the BRE. They spend millions of dollars changing the name.
The letterhead. Some printers probably.
Right.
figured
So
that
so
one
we
out.
are regulated. We do get audited. In fact, our mortgage pool fund is also independently audited annually. That's by law. And so we are very much regulated. In fact, a lot of the Dodd-Frank regulations that have been put into place in the last few years, and there's even more that are being enacted in January, come January, they do affect the private lending community as well. So we have to abide by all of California's lending restrictions when it comes to anti-predatory lending laws. So again,
Okay.
we're making quality loans. We're not making predatory loans. These are, which is why we generally don't make loans to consumers because, for example, we generally don't make seconds to homeowners with equity in their home. And the reason we don't, it's not that we don't like those loans because some of them are great. The problem is that under these new regulations, we have to underwrite them so tightly that the paperwork is just it's
Onerous.
a nightmare. It's onerous, right? So we stay away from those. And quite frankly, we have such a strong demand from the real estate investment community to borrow that we don't need to make those loans. Now, continuing on about the safety and security and the risks around private lending.
Okay, and remember, you're listening to Mortgage Investing 101 with
Yep.
Edward Brown and Mark Hahn. If you like what you hear today, call 415-883-2150. Go ahead.
The question I think you were going to ask a little bit earlier is, what kind of borrowers are those that would come to you for money at 10%, 3
That was on
points?
the tip of my tongue.
Yeah. So yes, it's expensive money. 10% note rate and 3 points on the origination, which would be 3% of the loan amount. So on a $100,000 loan, they would pay $3,000 in origination fees,
Okay.
Some documentation and processing fees, which in our company are around $1,000. Now we're up to $4,000, and the note rate's going to be 10, 10.5, maybe even 11%, depending on how long they want the money and where the property is located and what the borrower profile looks like. So
Sounds like a mob loan.
well, it's not, and actually, in terms of private money loans, that's not as expensive as it used to be to borrow privately. So, private money loans in the Bay Area pricing has come down. Origination points of 5 or 6 were not uncommon 5 or 10 years ago, and note rates of 12% or even 13% were not uncommon 5 or 10 years ago. But the rates have come down a bit, and the origination fees have come down a bit. But let's get back to the borrower profile. What kind of borrowers do you have? Well, most of our borrowers are experienced real estate investors. Some of them are contractors. Some of them might be licensed real estate professionals. They may be a realtor. Oftentimes, believe it or not, these guys have really good credit. Now, not every borrower at Pacific Private Money has good credit. Some of them have dinged up credit because they own property when the market turned, and maybe they let it go back to the bank. So there are foreclosures and short sales on many of our borrowers' credit profiles, and it has dinged their credit up a bit. So some of the scores are in the 600s. In fact, we've had borrowers come to us whose scores were in the 500s, and the reason it was is because they still owned multiple properties that they were trying to either short sale or do loan modification with the banks on rental properties that they own, for example. And are those guys a bad credit risk? Well, not necessarily, because again, a lot of these guys are very, very experienced at buying, fixing, and flipping property, and they've been doing it successfully in this market the last several years. And so we actually like borrowers like that. We like borrowers with a track record. We like borrowers who say, hey, here's the last house we just remodeled and flipped. Take a look at it on the MLS, which is one of the things we usually ask.
So, and here's a big thing, is that you're not lending them 100% of the purchase price.
No, we're not. We're making them come in with skin. That's the other thing. So we're lending to experienced borrowers. We are pulling their credit. We are investigating to make sure that they actually do pay at least their revolving credit or their other obligations. Maybe they let a few houses go. We do background checks. We do all of the stuff that you would expect in the form of due diligence on the borrower and the property. All of our loans go through a national escrow company, Title and Escrow. We don't fund loans out of our office. Everything, every single loan, all the time without exception, goes through a Title and Escrow company. There's always title insurance. There's always a title report generated. We review the title report before we make a loan on the property.
Okay, so it's not a guy comes in today and says, "Hey, I want to buy this property and I need the money tomorrow."
That's impossible.
Yeah.
See, in this industry, there are companies out there that say, "Oh, fast funding, 24 hours or 48 hours or even 72 hours." Well, it's unless the escrow is already open and everything has, or a lot of work has already been done in getting the transaction prepared, and maybe another lender failed at the last minute. In those situations, we can come in, and within 48 to 72 hours, generally, we can, if all of the information is there, we can underwrite and approve and fund a loan. But you can't do that if you just come to me with a property you want to buy, or you just got contract but escrow hasn't been open yet. I mean, there's certain things do take time. So fast funding is a little bit misleading. It generally only happens in very specific situations where a transaction has broken, where a bank was ready to fund and didn't, or another hard money lender. Oftentimes we get deals from that where the borrower was working with another hard money lender, and maybe their investor backed out for some reason last minute.
Well, I got a story for you. When we did a loan many years ago, there was an unscrupulous hard money lender, if you can believe that. And
there used to be a lot of them.
There was a lot
Most of those guys are out of business today.
Oh, I'm sure these guys were out of business. And what they ended up doing was giving one quote and doing a bait and switch. And when the person who was very naive went in to sign the paperwork, the hard money lender had changed the paperwork to say that they got to own 51% of the property. You know, I mean, it gave everyone a bad name.
That's unusual, because what's more typical is they go in and the rates change.
The rates
and
changed.
The fees have changed.
Yeah, well, this fee changed a lot. I mean, for equity, and so the person ended up deciding they caught it, and they said, "I'm not doing that." Well, there were reasons why they had to close quickly, and so they ended up coming to.
Yeah, most of the companies today, and certainly our company, I mean, our reputation at Pacific Private Money is for fast, reliable funding with pricing you can count on. And that's really important, because this industry does have a reputation for bait and switch. It does have a reputation. In fact, there are still a few companies out there advertising rates that I know they're not going to provide.
7%.
Yeah, 6.99, 7.99. I see ads. I get them emails all the time from companies, most of them in Southern California, things like that are claiming to offer these great loan programs, but at the end of the day, they normally are not able to perform. And quite frankly, the best private money loan is a locally originated loan. That's really the nature of this business, is that, and the reason why we do so well in the Bay Area is because we've been involved in Bay Area real estate for over 30 years. Specifically in private money loans for the past 5 years, just in the Bay Area. Now, we can make loans elsewhere, but 95% of our deal flow is Bay Area property, Bay Area borrowers, funded by Bay Area residents, earning 8% or more on the money that they invest in these notes.
So, in a sense, those unscrupulous hard money lenders, it's not really competition for you. It actually potentially feeds you deals, because people need money quickly. They start off with those guys. They can't do the loan, and now they really have to come to you.
Well, the good news about all the marketing that we've done at Pacific is that, having done as many loans as we do, we've become more and more ubiquitous in the industry of private money lending. And so, if someone's in trouble on a loan that was supposed to be funded by, ABC Hard Money Lending Company, and all of a sudden they say, "Sorry, we can't perform," or "Sorry, now we're going to have to bump your rate up and your fees." We do, oftentimes someone will say, "Hey, call this guy Pacific," because they're
honest.
They're good at closing deals quickly, and they have integrity when it comes to pricing. And that's again what you want to have. So
okay, so just to kind of recap, if people want to earn 8% or more, which right now if they would have invested in your fund 3 months ago, they would have had an 8.56%.
And not just 8% or more, but 8% that's secured by Bay Area Real Estate at a conservative loan to value, and it's insured by both title insurance policy securing your first lien position.
No,
Again, we only do first deeds of trust, and it's insured by the hazard insurance naming the lender.
Are all your loans 70% loan to value?
No, in fact, a lot of them are quite a bit less. Again, what's interesting about this business is because we're able to provide fast funding for business purposes, there are a lot of people who come up with a business opportunity. They first go to the bank wastes their time, they find out the bank's not going to do it, they come to us, the clock's ticking, they need a couple $100,000 or $300,000 or $400,000 or $500,000 by next week to execute on a specific opportunity, and they've got property with equity, and they want a fast loan. And so, and oftentimes those come in, sometimes it's 30%, 40%, maybe 50% loan to value. And in fact, the Pacific Private Money Fund right now, the weighted average loan to value of loans in the fund is 54%.
So the average loan in the portfolio is 54%, which is
The weighted average.
The weighted average, yeah, is very conservative, and yet the
Extremely
yield
conservative.
right now is 8.56%.
Right, we paid out 8.56.
So if I want to
in the third
invest
quarter.
today, would I be getting that 8.56%?
Well, past performance is no guarantee of future results. You probably
I've
heard that
a
time or
million
two.
times.
And so, but our goal is, it's interesting that it came in at 8.56, because 8.5 is my personal target for the fund. And that's when I talk about the yield of the fund, I say, the target yield for the fund is about 8.5%. And that was based on extensive financial modeling that we did before we created the fund. We looked at the last several hundred loans that we had done and plugged them into the fund spreadsheet and said, if we had done these loans to the fund, what would the yield and payout be based on the mechanics of how the fund works to the shareholders? And that number that kept getting spit out was between 8.25% and 9%.
Interesting.
So, yes.
We've only got a couple of quick minutes.
Sure.
One of the things that I would be thinking of if I'm listening to Mortgage Investing 101 is, if I invest with you, how do I get out? What kind of liquidity?
It depends on whether you're investing in an individual note or in the mortgage pool fund. When you invest in an individual note, you get paid off when the note matures or if the property sells. And since most of our loans are purchase money loans made to people buying, fixing, and flipping, the average payoff is 8 months on those loans. So you would not be looking at a long-term commitment. Now, if you invest in a mortgage pool fund, we ask that you keep the money in a minimum of 2 years. So there is a prepayment or early withdrawal penalty if you take your money out in less than 2 years. But for a lot of people, that actually is not a problem, because we found 2 years to be actually a kind of an average length of time that people had a comfort level with. And in fact, some of my investors don't like the short term getting paid off in 6 to 8 months.
Oh yeah, then you got to find another place.
Well, then
and
then it goes back. It goes
Yeah.
back to cash. So again, it just depends on your appetite. There are pros and cons to both focusing on individual loans or investing through a mortgage pool fund. And again, at Pacific Private Money, we do both. We do both individual trust deeds, individual loans, and we have our mortgage pool fund, which just paid at 8.56%. So again, for more information, as we're drawing to a close in this edition of Mortgage Investing 101, for more information, please contact Pacific Private Money. You can call over the weekend and leave a message for us. We're at 415-883-2150. That's 415-883-2150. Go to our website at pacificprivatemoney.com. You can also check us out on LinkedIn. My profile is there. We've got a lot of detail on it. We try to be as transparent as possible, so you can find out, who are those guys anyway?
And I'm excited because
claim to offer 8% or more.
And since you said that the first check just came out, I'm excited because
You're going to get yours.
That's right.
Yours next week.
I am going to get
It's
mine.
in the mail.
In the mail. Checks in the mail. Okay, well, we'll see about that. Okay, tune in next week to Mortgage Investing 101. We're going to be giving away more vacations that are free for answering trivia questions and giving more valuable information about mortgage investing. Thanks for listening. I'm your host, Edward Brown, and on behalf of Mortgage Investing 101, so long. We'll catch you next week.
Nice. That was good. That works. That works. All right.
Mr. Kramer!